In his work, Elon Musk has consistently, pushed the limits of artificial intelligence ahead while also raising concerns. He has, made several statements about the need for caution. I suppose I'm not shocked to hear the worries, because he even hinted that he would eventually introduce a rival to ChatGPT. Yet, as I mentioned earlier, I believe that in this instance, especially for Tesla, the potential lies in robotaxis, and there are indications that autonomous driving is already safer than human driving. The accident rate per million miles driven in the full self-driving software was first made public during Tesla's Investor Day. It would indicate that a Tesla in FSD is around 5 times safer than a Tesla driven by a person today if you adjust that rate for city streets. Because until the most recent version, that's really where the FSD beta software worked. As we untangle the mysterious dance between autonomous vehicles and the financial landscape, we're going into uncharted territory. As we unravel Tesla's strategic maneuvers, navigate through ARK's imaginative visions, and construct a picture of what lies ahead for this trailblazing firm, prepare to buckle up. Join us on this thrilling voyage into the center of innovation by grabbing your virtual steering wheels. If you haven't already, please like and subscribe to our channel before we go any further. It's going to be an exciting ride, so buckle up and welcome to Tesla Stock News. As in prior years, ARK Invest has released its most recent study report for 2024, which is jam-packed with creative ideas. The revolutionary effect of robo-taxes on transportation is one noteworthy feature that raises the possibility that Tesla will control the market. The study investigates the potential intersections between robo-taxes and Tesla's business model for Optimus, their Tesla bot, which might lead to an exciting development in the sector. Imagine if autonomous ride-hailing has the potential to completely transform point-to-point transportation. Travel back in time to 1871, when horse-drawn carriages were expensive. They cost $1.70 per mile. After the Model T was introduced in 1934, the price per mile fell to just 7 cents. The worst part is that it has stagnated for a long time at about 70 cents per mile. According to ARK Invest, robo-taxis combined with electric cars might revolutionize the market by bringing down prices to as low as 25 cents per mile by 2030. Isn't that ambitious? However, the impact is enormous, even if it takes a little longer, say till 2035. In just 10 or so years, we're talking about cutting our lifetime transportation costs in half. Let's speak about numbers now. At the moment, there are about 2 million passenger rides each year in about 20 cities using robot taxis. It's impressive, but it pales in comparison to the trillions of miles driven each year. Beidou leads the field in China with 1.5 to 1.6 million miles, followed by Waymo with about 0.5 million if you look to the left. The twist, though, is the autonomous miles run rate. This isn't your normal taxi journey. With Tesla's complete self-driving option, the miles are tracked automatically. Who do you think is speeding ahead? Yes, Tesla, with an astounding 710 to 720 million miles of autonomous travel each year. If autonomous robotaxi services can be effectively activated, Tesla will have a major edge. But making this shift requires overcoming legal and technological obstacles. According to ARK's research, Tesla now provides a far safer alternative to other cars on the road thanks to its fully autonomous driving and human supervision. According to the data, cars like Cruise, which are going to be shut down, only traveled 43,000 miles before being involved in an accident, mostly on surface roadways. Because the driving situation is less complicated on highways, Tesla performs noticeably better. Waymo, on the other hand, promises safety standards more than twice as high as the national average for human drivers, while being limited to certain cities. Additionally, human-driven Teslas with integrated safety systems perform better than both Waymo and traditional automobiles. With an average of 3.2 million miles per collision, a startling 16 times safer than the national average, Tesla's fully autonomous driving on surface streets, however, produces the most startling statistics. This emphasizes Tesla's standing as the safest vehicle available, particularly when safety is a top priority. Additionally, by 2030, switching to electric and driverless cars could potentially save 10,000 lives a year in the US alone, mitigating the serious health concerns associated with traditional vehicle gas emissions. Large language models and generative artificial intelligence, AI, have the potential to revolutionize robotics by 2024. The model that stands out in this instance is Eureka, denoted by the purple bar. It needs very little human input and is capable of understanding tasks immediately without the need for previous examples. Eureka performs on par with or even better than humans in a variety of domains on the range of tasks displayed on the right. This represents a major advancement, showing that robotics and existing technologies can perform tasks just as well as, if not better than, people. Let's change our focus and take a look at a slide from the Big Ideas in 2023 presentation last year. It estimates that by lowering the cost per mile, autonomous ride-hailing may create a transportation sector worth an astounding $1 trillion. The potential for more use soars as people switch from owning their own cars to reasonably priced autonomous ride-hailing. This shift is depicted in the graph, which shows how the market has grown from its present $2, $4 per mile to a $1 trillion market at $1 per mile, with more expansions as the cost per mile declines. ARC's prediction that this will be accomplished by 2030 signals a significant change in the dynamics of transportation that might completely upend the environment. We come upon a crucial slide as we zoom in on the main issue. It emphasizes that the majority of profits in this sector might be made by snagging the first 50% of urban autonomous kilometers. Whoever controls the first 50% of ride-hailing cars in cities will receive about 80% of the profits, as the graph illustrates. Tesla is well positioned to dominate this critical stage because to its sizable fleet, production capacity, and upcoming reasonably priced vehicles that are suited for robotaxis. By securing a sizable piece of this first market share, Tesla may be able to access a sizable portion of the revenue pool, perhaps 80% of it, leaving latecomers with only a small portion of the profits. Being the pioneer in the field of driverless vehicles gives Tesla a big edge. Tesla distinguishes itself in the market by integrating cutting-edge hardware and software into their cars, and by having unmatched manufacturing capabilities. Other competitors, such as BYD, are superior at mass production, but they fall short of Tesla in the development of autonomous software. Turning now to the effect on the vehicle loan market, conventional automakers are facing some alarming news. An impending crisis is indicated by the graph's escalating default rates for both prime and subprime vehicle loans. According to ARC's estimate, which is based on Wright's law, costs drop by about 24 to 28% as the production of electric vehicles doubles. This continuous trend of EV cost reductions has the potential to drastically reduce the value of gas-powered cars, putting the $1.6 trillion in auto loans associated with them at risk. Banks and the finance divisions of traditional auto dealers are among the financial entities that face significant risks when interest rates rise and the value of gas-powered automobiles rapidly declines. Lenders may lose money if borrowers default on their loans. The financial ecosystem of the auto industry is seriously threatened by this revolution. By 2030, autonomous platform providers may provide an astounding $28 trillion in enterprise value, according to ARC's projections. This forecast has consequences for projects like the Tesla bot in addition to Tesla's automobiles. Tesla must adjust its strategy as the market changes in order to take advantage of the enormous potential for autonomous platform providers. It is important